Welcome back, guys, to another episode of Dimitri's Desk, where we cover technical analysis in crypto markets. This is episode 11, and man, we have a packed episode for today. Volatility is back, volumes are up, things are moving. We're going to recap our indicators from last week and take a look at the most important charts: BTC, IOST, ETH, EOS. And we're going to take a look at the COT report, fear indicator, and we're going to talk a lot about the volume. Who is getting wrecked and who is making money in this market right now? And lots of you might be asking, when is this correction going to be over? When we're going to bounce back up? We're going to discuss all of that and more on this episode. All right, we're going to jump into BTC USD first. This time, we're going to take a look and see how much we have dropped off since the last time. Looks like we made that pin at the top here at 10.7. That spike was pretty quick and sold off very aggressively on that day. We're down about 13% from that top. Actually, this formation was very interesting. I was observing it very closely because this is what's known as a hammer formation, which could be a bullish indication. But however, if look into it more, it actually depends on the next candle to validate this bullish momentum, and we didn't get that. So essentially, this is indication of a selling pressure that continued to go on. Now, the important thing that I've been watching, and I actually tweeted this on August 26th, I believe. Yes. Looks like, see, never forget that volume dictates the price, not the other way around. Now, if you take a look, the volume itself, OBV, that we use, which is a buy and sell volume represented in the line, you can see that that has been steady, which signifies more of the same in terms of price action. Now, what have we been seeing lately? We've been seeing red candles. We've been seeing selling pressure lately. So that just validates the fact that the trend of a downward pressure continues. And this is in fact what we got. So we did get that selling pressure. We continue to go lower. Right now we're trading at about 9,500. Looks like 9,500 is becoming more of a resistance rather than the support at this point. So the important thing that I want to talk to you about is volume versus price. So a lot of people think that price dictates volume. So as the price goes up, the volume goes up because people are buying in, and vice versa. If the price is coming down, the volume is going up for the sell. Now, that's not necessarily true. If you think of it, it's actually the other way around, because volume dictates price. Volume itself is what signifies a significant move. It causes the move, not the price. Price does not cause the move. Usually, retail traders are the ones that will classify as price moving the volume, but that's not true. We can see that example actually in the recent price action here on BTC USD, where we had these small spikes of buying volume and aggressive spikes of selling volume, which essentially represents a downward pressure in a short-term trend. And this is what we're getting right now. So right now we're still getting pressure from sellers to move BTC USD lower. Now, important levels to watch. Obviously, we covered 9,500. Now, we're looking to drop to around 9,100 is the next level of support. Below that, we have 8,700 and 8,500 are the next support levels, which this is something that we can definitely see in the short term as the price continues to move lower, as we see the volume continues to represent the same thing. Yeah, if you take a look at it, I mean, any time frame, in a 4-hour, looks like we had these flags that I've identified before. And congrats on those people that were able to take short positions and capitalize on this downward movement. All right, now, how does this relate to other tokens, right? So let's take a look at IOST USD, for example. Yeah, we did have a drop-off, obviously, in this as well. We dropped actually below the 0.7 mark, and right now we're kind of chilling in here and trying to find out the next opportunity to move higher or lower. But if you take a look at the IOST USD volume, actually it looks very different from BTC USD, because that volume has been going up consistently in terms of buying volume. So you can see the buying volume has been going up as the selling volume has been kind of weak. right? So that kind of represents the opportunity for IOST USD to actually recover the price and go higher as the overall market starts picking up and turning around. So right now, obviously, we dropped off with the rest of the market, but overall, if you compare this in terms of volume, again, volume dictates price. We're still on pace to go higher. There are a lot of fundamental things involved with the IOST USD. Obviously, take a look at our podcast that we released just recently, where we go over all the fundamentals there. But here we're going to talk about price action and technicals only. So as you can see, OBV is looking solid, even though the price has made some lows. Now, I've talked about ETH/USD quite a bit, and I've mentioned many times how I'm worried about the fact that we're still below 240, and I'm not looking to take any positions in terms of longs, and I was cautioning you guys to do the same until we actually revert back to that 240 above mark, where we can possibly look for entries for the upside. Now, as you can see, the price did consolidate. We moved lower. We tested that 200. After we broke it, that became the resistance. Now we're at 269. OBV is looking again similar to BTC, which should indicate more of the same price action, downward pressure for ETH/USD. Now, things are not really looking too good for the upside at the moment for ETH/USD, so I would stay away again from it. Looks like we're going to be testing that 160, 140, 120. All of these levels are going to be very important. But again, OBV is not showing that conviction or the recovery just yet on ETH/USD. So right now, I'm staying away from it. EOS USD, right. So again, we are below that $5 mark, obviously, that I've been talking about for quite a bit. As long as it's below $5 mark, I wouldn't be looking for any opportunities to the upside. And as we can see, we still have that choppy pressure to the downside. OBV is turning down as there's heavy selling volume. We're really, poked at that below $3 mark for just a bit, and then kind of retraced a little bit higher. But yeah, if I've talked about this before, if we break that $3 mark, and we test it as a resistance, then it's going to be a pretty grim scenario for EOS USD, where we're going to see like 250 and 2s as far as the price goes. So OBV is showing again a negative sign for EOS USD, and I'm staying away from it as well. Really quick, let's take a look at the BTC dominance and total market cap. As you can see, things are still kind of moving in a direction that they've been moving in for quite a bit, where we have BTC essentially either making new highs in dominance or ranging where the total market cap has been dropping off, which signifies more bleeding out of alts, and you have the ability to chase yields and pick up entries in BTC. We've covered this many times on previous episodes, where you see BTC dominance either going up or moving sideways, and total market cap is dropping off. So essentially, you have traders that are chasing yield in BTC right now, rather than chasing yields in altcoins. So, before we had alts that were pumping a significant amount in terms of percentage points on a daily basis, right? Now we have BTC volatility that's picking up, and pair that up with the leverage that you can get from different platforms like BitMEX, Bybit, and so on. You can amplify a 10% move that can turn into a 100% move based on the leverage that you use. Obviously, leverage is more risk, and it's very risky to do that when you use excessive leverage like 50 to 1, 100 to 1, and so on, especially in these volatile markets. But this is the reason why a lot of people are trying to stay away from alts and chase the yield in BTC, because they have that product. They have the leverage to be able to capitalize on any significant move in BTC upwards or downwards. All right, let's get into the COT report. Now, we've covered this before on a previous episode where we looked at asset managers. This COT report, or commitment of traders report, that actually comes out for BTC futures, where it shows you the positioning of key players in the market week after week. So this report gets released every week. Now, this time we're actually going to look at dealers. The last time we looked at asset managers, which is essentially institutional traders. Now we're going to look at dealers. Dealers are actually the ones that are on the sell side. So what does that mean? Asset managers, they're on the buy side. because they use the product either buy long or sell short, where the dealers actually take the other side of the trade. If you're buying, they're selling it to you. If you're selling, they're buying it from you. So the dealers, what they usually do is they offset these positions with other traders, or they offset it with third parties, right? So they're net neutral. But that does not always happen. So sometimes they decide to take a directional position where they see an opportunity in the market where there will be actually net short based on the positioning of their book, or net long. And this is what you can see that in this chart. As you can see, red represents just a net short positioning for these dealers, which is essentially kind of like exchange. And then you have blue, which is net long. Now, what I've done, actually, I've plugged in some of these dates on the chart to see how does the BTC price behave and how good are these dealers at timing the market and taking the opportunity. So let's take a look. All right, let's take a look at the BTC USD chart where we have these dates plugged in. So as you can see, these arrows indicate their net short or net long positions for dealers. And as you can see, they were net short here, and they started building up a net long position here, 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 and here. All right, so we did have a pop here about 30%, over 30%. So that was a very good call for them. And right after that, they actually switched their net long positioning to net short, which actually started signifying a downward pressure. So they're actually not bad at timing the market. These guys were pretty good at picking entries, even though they did have to experience a little bit of a drawdown based on the first entry that they had, and then they continued to pile up more long positioning, net long position on their books. So they're not doing too bad, and right now they're still net short. We're going to have to see the next COT report to see if that changes. But yeah, if you want to take a look at this, it's a CME group. We have COT report. They actually have an explanation of each and single detail here on the tabs. If you take a look here, as I was mentioning, dealers, these participants are what are typically described as sell side of the market. They tend to have match books or offset their risk across markets and clients. So this is what I said, basically they have the ability for to offset, to hedge their exposure of buy and sell positions that they have to take on. Now, they don't have to do that perfectly, because there's a possibility you can make money if you don't offset it to one single side. And that's exactly what they did. And you can see that in this report. This is something to think about and keep in mind. This is not necessarily a single indicator that's going to give you the holy grail and you're just going to mirror it, going to make money. This is something just to keep in mind as you're putting this into your trading plan, to have a 40,000 feet view of what's going on in terms of price and momentum and how these guys see it on their end. Now, as far as crypto fear and greed indicator, it looks like we're coming down now. We did pop, right? So we did come up and we hit that 32 mark a couple days before we start retreating. Now, right now, even though we are in fear, and yes, extreme fear, and that indicates a buying opportunity, and a lot of people, are going to claim, yes, this is the time to buy, but you have to keep this in mind, that even though we're in extreme fear, that doesn't mean that the price is going to start reversing right now. And now, it does indicate that you should be looking for an opportunity where there is clear support, and we see candle formations that are indicating support with the volume behind it. Then there's a possibility for reversal in a trend, and we can see a fear and greed indicator become useful. So at the moment, we're selling off. We're in extreme fear. Yes, there will be an opportunity to pick this up, but that's not necessarily right this moment. You have to keep that in mind as you use this indicator. All right, guys, that's about it. I'm going to wrap it up here. This is my Twitter handle. I promise I'm trying to stay more active on here and post TA throughout the week and things that I see in the market. See, if you like, you can follow me. I've posted some charts here before. As you can see, the ADX divergence, and actually that was a pretty huge indication here for the downward pressure. So, and please leave any feedback that you guys have about the episode. Hope you liked it, and as always, happy trading.